Welcome everyone, you're listening to Nephology, the podcast dedicated to crypto, accounting, business, finance and much, much more. I'm Joe David, the founder of Nephos Group and Miner. Please note that all conversations recorded are professional opinions, and if you'd like to know more or gain support, please reach out to the team directly. Now on to the next episode. Hello everyone, welcome to the Nephology podcast. Delighted to be joined by my friend Kevin Crowther. Kevin, how are you?
I'm very well, thanks, Joe. And yourself?
Yeah, I'm good, thank you. How are you doing back at Dubai? You were in South Africa?
I was in South Africa for 2 weeks, family holiday,
Amazing.
Saw the grandparents, all the parents, always great to catch up, but now back to the summer heat and getting stuck in for the summer.
Yeah, it's definitely that summer heat. I saw a tweet or a post or some Dubai-based news outlet and saying, welcome back summer. Did we miss you? No.
Yes, spot on.
Yeah, it's definitely starting to warm up, but yeah, and nicely warm up, not just in the weather, but also in business, right? There's lots going on.
Very true, very true.
So first of all, let's tell everyone who you are, where you've come from and what you do.
Yeah, absolutely. So my name's Kevin Crowther. I work for a multi-family office. Essentially think of us as an independent private bank. So we essentially sit in between some of the world's largest private banks and the clients. So we manage the client relationship, provide the advice, the investment portfolios, the strategy, all of that. Over and above pure investments, we also do, as you know, that broader holistic financial planning piece. So we're very much specialized in the expat market, but the international, tax planning, estate planning, inheritance, all of these sort of things, it's all part of the service. But at our core, we're asset managers.
Amazing. And what's your background? What's your history? Where have you come from?
I've come from the UK. So I've grew up in Cheshire, university, studied economics and finance, then straight into the private banking world. So I've worked in London, I've worked in Geneva, and I've now been here in Dubai for, pretty much bang on 4 years.
Amazing.
So seen a little bit of the world, but ultimately been in the investment and private banking space the whole career.
Yeah, amazing. So you probably travel between, I would say, 3 pretty important private banking wealth hubs, London, Geneva, and now Dubai, with being the kind of, it's called the Middle East, and it does now feel like it's the middle of the world, really, in terms of operations, hence why we came here as well. So, first of all, what brought you to Dubai? What made you want to come? You're in London, you're in Geneva. What made you want to come?
Yeah, great question. So, same reasons as everyone, I guess. I was very lucky in the company I worked for at the time. They had a global footprint, so they had offices in all those locations. I traveled to those cities with that company. But essentially the team I was in was based in Geneva, and everyone in the team pretty much, again, saw the lifestyle, tax-free income, saw the weather, all of the good things that bring all of us here. So we essentially approached our company at the time and we said, we all feel this way. I think it makes sense from a corporate point of view. We've got clients all over the world. So from a time zone point of view as well, it made more sense than being based in Europe. And they said yes. So, we jumped at the opportunity and the team packed up their bags and moved over here and, not looked back since.
Yeah. I'm same for me, not looked back either. Since I moved here, it's a different world here, and not just the glitz and the glamour that you see online and all those things, but it's just such a vibrant city. Everything, although the traffic can be bad, everything is within touching distance, and it's such a positive city. Everybody wants to do things with you and for you and help you and all those things. And that, I think, is such a, really important part of the culture here.
100%.
So, a big part of the UAE is that it's an expat kind of culture. And you mentioned that you work with expats. So maybe you can give us a few kind of different ways that you work and help expats that come to Dubai and the sort of things you do.
Yeah, absolutely. So again, I guess we've touched upon it there. People come here for the high earning potential, the job opportunities, the business opportunities, and the tax-free environment. Obviously, they just introduced corporation tax, so maybe not tax-free from that point of view anymore, but it's still a very attractive tax rate there. So, fundamentally, I think it is finances that bring those expats here and make them stay here. So that's really where we plug in. That's why we focus on the market. Now, when people uproot their lives or uproot their businesses and move to a new country, a new environment, they're unfamiliar with. So a lot of people need assistance in that Otherwise, they potentially end up making the wrong choices or potentially not the most efficient choices with their finances, with their money. And also the complications that come with that, right? All of a sudden now you're dealing with cross-border assets. If we're from the UK, for example, property, houses, investments, pensions, whatever it might be in the UK in a taxable environment.
Yeah.
But then you're here in a non-taxable environment and the pitfalls that, ultimately arise as part of that. So that's really where we assist and add, I guess, the most value to our clients and why we specialize in the expat market.
Yeah.
Because anyone can assist clients on the investment side. Like that's very bread and butter.
Yeah.
But it's the complexities where the true value is added,
100%.
I guess, over and above our competition within the private banking space.
Yeah, I totally agree. Anyone can pick some products and say, use those products.
Yeah, exactly.
And you'll do all right. And typically you will do all right. But it's that, like you say, getting that nuance, getting that specific support with someone. And it's the same for us as a business. No one client is the same, that old mantra, but it is so true.
Yeah,
we make sure that every client we talk to, we understand the goal, we understand what they want to achieve, because without the goal, how are you on earth are you going to tell them where to go? So we'll help them where to go. So on that point, maybe you could touch on some of the differences between maybe the UK, European sort of market and products and stuff, and then what you're seeing here and maybe the different trends in the market.
Yeah, absolutely. So yeah, I think really from a personal finance point of view, I'll talk. So I think in the UK, it's almost all done. Let's say the bare minimum is done for you. It's taken out of your hands. So what I'm referring to here is essentially just, your workplace or corporate pension. Something which is written into law. You have to contribute a portion of your paycheck to. Your employer has to contribute a portion of your paycheck to. You don't get any say in the matter. It's set up automatically for you, and that's you set for your working career. So the government takes that choice away from you, and you get national insurance as well. Again, something that happens automatically. You get your state pension. You benefit from that. As soon as you move out of that environment, well, no one's here to save you, right? So, we're not Emiratis. We're not citizens of the UAE. It's not the government aren't going to come to our rescue. So it's now all of a sudden on our shoulders to be responsible and make sure that we're setting ourselves up for success in the future.
Yeah.
So in the UK, like fundamentally, everyone's got, like I say, it's the bare minimum. Is it enough? Will the state pension even exist by the time we're retiring? Probability says it's probably not going to, right?
Yeah.
But at least you've got some sort of nest egg there automatically set up for you to take advantage of. And I mentioned again, when people move here, they're in an environment which they're unfamiliar with. So in the UK, everyone knows what an ISA is, right? Yeah. It's a tax efficient, cash ISA, stocks and shares ISA, lifetime ISA, for example. But everyone knows that an ISA is there and it's worth taking advantage of because of the tax efficiencies built into that. And then various other things as well. But like I say, these are really, I guess, the check boxes that people go through when they enter the working world, start to earn good money, have surplus money, and start to take investments seriously.
Yeah.
When you're here, you're now stepping into the world of the unknown. And like I say, like the pension doesn't exist.
Yeah.
An ISA certainly doesn't exist. So you now all of a sudden need to educate yourself or employ someone like me to give you the proper knowledge to ensure that you're structuring your investments properly. And one very common mistake, for example, I see, clients and prospective clients making is because this is very unfamiliar, they automatically default back to the UK, for example,
right?
Which is talking about the UAE, of course. So taking your tax-free earnings and putting it into a taxable environment.
Yeah.
Now you can't contribute to an ISA if you're not a UK tax citizen. Obviously, you can't put money into the pension. You can put small amounts, but chances are you're going to be putting it into a non-tax efficient environment to invest, grow, buy property, for example. All of those assets are now subject to capital gains, which they wouldn't be if you'd kept that money offshore. Exactly that.
And on that point then, you talk about there aren't ISAs, which I can loosely understand why there aren't ISAs, because ISAs are really there from a tax perspective and there is no tax, so there'd be little benefit to it, right? But things like pensions, yes, there's the reason why there's tax incentives in the UK, for example, on pensions is because otherwise people like us, younger generation, wouldn't put their money in a pension. Because why would they? Why would they lock it up until
exactly.
X, when they don't need to or whatever? We all think we can do better, right? But by putting tax incentives in place, it says, well, actually, because truth be told, a pension investment from a limited company or as an individual is probably the most tax efficient thing you can do in the UK, right? Fact.
Yes.
Bar none. But still, people don't really want to do it because they're all younger people. They're still a bit like, is that what I want to do, etc., etc. When you then transition to an environment here where that tax element is taken away, so part of the benefit to doing that thing is taken away. What sort of products are you then seeing in this market that you're talking to clients about versus those? And what's your kind of door opener, if you like, that may have been tax that now isn't tax? What's that process look like for you?
Yeah, absolutely. Great question. So you're absolutely spot on. The only reason anyone locks their money away until age 65 or whatever it might be is because of the tax incentives.
Yeah.
And the government forces you to as well, but obviously people make voluntary contributions for the tax point of view. So now you're not getting those tax incentives. Well, obviously, why would you lock your money away unnecessarily? I'm a big believer in flexibility. None of us can predict the future. We don't know what's going to arise, expenses, lose our jobs, the company goes bust, whatever it might be. So flexibility wherever you can is very, very important. But essentially, I guess it becomes down to, well, now we've ticked the box of we know that we don't want to put our money into a taxable environment. So a lot of clients will keep their money here in the UAE. But the more fundamental mistake I see people making is sitting on surplus amounts of cash. And the UAE and Dubai, it's a very transitory market. People don't really think, till age 65, like you've just implied. People think 1 year, 2 years at a time here. And as a result, they don't commit to those long-term investments, those long-term structures that they ultimately need to in order to secure themselves financially in the future.
And why do you think that is? Do you think that is a lack of perception of what happens when they're 65 and their income drops off and they don't have it anymore? And, we're using 65 as a number, and by the time we get there, it'll probably be 80. But, do you think it's that you don't know what you can't see type scenario? Or, is it just that short-sighted nature of human beings that we go, do you know what? We can see what's in front of us. We don't want to see what's in front of us in 30, 40, whatever years' time. What do you see when you talk to clients on that?
I'd say it's twofold. So the first one is definitely, it's the short-sighted nature of human individuals and the way that we're wired. People do generally, they've got so much on their plates. They're so busy. They've got so many short-term priorities. It's very much something that is in the back of, I think, everyone's mind. But in order for them to take action, it never really gets to the top of the priority list. So it naturally kind of falls to the wayside. And then a year turns into 3 and turns into 5 and so on and so forth. So that's the first one. The second one I'd say is, again, if Dubai, like you said earlier, it's a very flashy, glitzy place, right? Keeping up with the Joneses. We've seen so many people come here, and I think the statistics, something like 75% of expats leave the UAE poorer than when they arrive. Madness, right? Madness. So the fundamental reason of all of us coming here, which is money and to set ourselves up financially for our future, you get here and you see all the glitz and the glamour and the brunches and the parties and the nice watches and the expensive bottles of champagne. You get caught up in that, and you just blow all of your money. So that really doesn't help with the short-sighted nature default of humans. It compounds that.
So does that a challenge for you then, as somebody that's trying to help somebody manage their wealth and build wealth for the future? I mean, it's an obvious question, but is that a real challenge for you then, saying to someone, all right, guys, don't go to that party tonight and don't buy the Lambo. Instead of doing that, come over here and invest in this really boring product that will help you in 30 years' time?
Yeah, huge challenge. I talk to clients all the time, and I've mentioned people sit on too much cash, but I guess the first problem is people need to save in order to get that surplus cash. And so many people just don't even overcome that hurdle. And it's a massive challenge. And that's where I'd say the biggest part of my job is truly the education piece. Yeah. It's educating people. Yes, you can go and buy the Lambo or the Rolex, but what's the opportunity cost of you doing that versus you taking, let's take the Rolex, for example, versus you taking that $25,000 and investing it for the next 40 years. Go and buy the Rolex when you get your next bonus. Or, next year, for example. Don't do it now, because when it comes to investing, generating wealth, time is the most important factor. Hands down, by a considerable margin because of the compounding over a period. So the earlier you do it, then you can go and buy 10 Rolexes in the future, and it's not going to make any sort of dent in terms of your net worth or your wealth or, your future planning. So
Makes sense.
like you say, it's a massive challenge. But that's where the education piece comes in.
Yeah, for sure. And you may not be able to answer this question in a sense of you may not know the answer, or you may not have a kind of specific answer. But do you have a kind of, when you're talking to clients and they say, well, I want the Rolex, I want the Lambo, I want this, do you have like a number, like a percentage of net worth where you go, look, if that Lambo and that watch is going to cost you 2%, 5%, whatever the number is of your net worth, then look, we're okay to accept that. But anything over that, you need to be considering that purchase. Like I said, you may not be able to answer that, it's a hard question, but do you have any kind of thresholds like that you talk to clients about?
Yeah, no, it's a great question. So I'll flip it on its head. And as a rule of thumb, everyone should be putting 20% of their income to the side for their future, invested in growing in an appropriate asset, whether it's property, whether it's stocks, shares, crypto, whatever it might be, or even cash. Again, it's better than nothing. But as a rule of thumb, 20% should be put to the side for the future. If you do that, realistically, again, assuming it's appropriate invested, cash isn't going to work for you, but you will be secure in the future. Over and above that, if you're someone who's earning $1 million every month, yeah, go ahead and buy the Lambo. It's not going to make a difference whatsoever, as long as you pull that 20% to the side.
Okay.
If you're making $1 million a month, you might think, well, I only need to put 5% to the side. But then it comes to the retirement, all of a sudden your income switched off, and your standard of living now has to drop through the floor, and no one really wants to do that. So
no, agreed. And that's why I use the percentage word rather than the monetary word, because, like you said, if you're earning $1 million a month, you might think, well, I can put away 5%, and that is still 10 times the amount of someone that's putting 20% away on this salary over here. But like you said, then your lifestyle is going to change significantly. And I say that about footballers, right? And they get paid these ridiculous salaries, and everyone goes, well, they must have so much surplus cash. You go, yeah, but their lifestyle will be adapted around the fact they earn that money. So if they stop earning all that money, that's why some of these people get into financial difficulty, turn to things like gambling and whatnot, because they're used to living this life, and then all of a sudden they didn't plan for the future. Now all of a sudden they're not living anywhere near the life that they were living. And they've got to kind of change their lifestyle. So I think that's a really good point. Rather than focus on what you can spend and then what you can invest, focus on what you should be investing or putting to one side, and then say, okay, now how much have I got left?
Exactly.
And after that, have I spent, put food on the table, done this, and I've still got 25 grand left? Great, I'll go and buy that Rolex.
Yes, exactly that. Spot on. It's, set yourself up for success. And what's it, Rich Dad, Poor Dad?
Yeah.
He always says, pay yourself first.
Yeah.
And that's exactly what he's referring to. Pay yourself first. Whatever's left over, go and spend it on brunch, go and buy a Rolex, go and buy a Lambo, whatever it might be.
I feel like for clickbait, we should call this video How to Buy a Rolex. But no. Cool. Okay. So in terms of the Middle East itself, one of the big boom areas of this part of the world is property.
Yes.
Where do you see property in a portfolio? And I'm not asking you to be a property expert. I'm just, people talk about property here. Is it a big part of people's portfolio? Do people come here and go, the first thing they say is, I want property? Well, how do you see it?
Great question. And it's obviously such a hot topic. Since COVID, when the market bottomed out, as we're all aware, it's been on an unbelievable run, both from a rental point of view and capital appreciation point of view. So property naturally is something that it's very hot. People want to talk about it, and naturally people want to invest in it. To answer your first question, I'll say, where do I see property in a portfolio? Absolutely a necessity. In any well-diverse portfolio, property should certainly feature within that. Does it have to be, and should it be UAE property though? Probably not, in my opinion.
Yeah, interesting.
So we mentioned it earlier, humans are very short-sighted. So everyone's seen, the 20% increases in property that we've seen over the past 3-4 years in the UAE. And now everyone's really excited. Everyone wants to dive in, FOMO, fear of missing out. It seems over the short term, over the short period history that we've naturally see as humans, it seems like a great investment and it can't go wrong. But firstly, let's remember we live in a desert, right? There's no shortage of space.
Yeah.
And couple that with the fact that the authorities here will just go and build an island as well. So there's no shortage of space, and they're also increasing the supply of space and land here as well. Now,
I think sorry to jump in. I think somebody said by building the Palm, they increased the coastal area of the city by 100 kilometers or something like that, which is insane when you think about the concept of of that.
Yes.
That they've now created 100 kilometers of extra beachfront property
Exactly, right?
out of nowhere.
Yeah, exactly that. Luxury, highly in demand property, which should have a supply squeeze. They've just gone and increased the supply.
Yeah.
And for property to be successful over the long term, natural fundamentals of economics, supply and demand.
Yeah.
So, if we look at London, for example, or Manchester, there's no more space. They're building out, but everything's happening in the middle. So everyone wants to be in the middle. Naturally, that is creating that supply squeeze and pushing property prices up. Whereas in the UAE, you've got significant amounts of space in the desert, and they will also increase the supply forwards into the sea as well, which is naturally gonna provide a bit of a ceiling or at least a downwards pressure.
Yeah, at risk.
Yes, exactly that. For, those beachfront properties, which should be a scarce resource, well, they can just go and increase the supply. So, property for me, from a fundamental economic point of view, you hit the nail on the head, risk in the UAE. And yes, a lot of people have made serious amounts of money over the past couple of years. But if we look at history in the UAE, property prices today still aren't as high as they were back in 2014.
Right.
A statistic which so many people don't know, but if you bought in 2014, you're still sitting on losses on your property.
Interesting.
Yeah, so the UAE market is incredibly cyclical. Right now, we're going through a booming trend. Obviously, we had the lows during COVID. A lot of people lost their jobs, and the UAE does an incredible job, and rightly so, of marketing itself to the rest of the world.
Yeah.
So a lot of people are focused on here. A lot of people are moving here personally. Businesses are moving here, etc. So yes, we've seen a massive, massive boom in the property market. Will it continue forever? I don't think the fundamental supply and demand concerns that push UK property, for example, continuously higher, 5% every single year, exist here. And for me, that's why diversification, I caution clients against it. I see so many clients overexposed, or 100% of their portfolio is exposed to property here. Why wouldn't you diversify?
Yeah, I totally agree. And on that point then, obviously, I'm sure most people know what the word diversifying and diversification means, but in the context of a portfolio, can you maybe give us an example of a diversified portfolio? And by that, I mean, just some high level property, this, that, not the specifics.
Yeah, absolutely. So, stocks and shares obviously is the one that comes to everyone's mind. Don't go and punt all your money into Tesla. Great example, by the way. Had an incredible run, was making headlines everywhere. And now I think the stock's somewhere down
they're struggling
over the past 12 months or so.
Yeah.
I don't know the statistic off the top of my head. But so, for retail investors and people just starting, or people just that want to have a somewhat secure, stable return, ETFs, mutual funds, go and invest in large blue chip companies. Don't only focus on the US market. Again, Tesla, Facebook, the FANG stocks, all of these companies that everyone thinks of, all in the US. Yes, they're global as well, so they're naturally diversified. But the US, the UK, Europe, building some emerging markets in there as well. Stocks and shares, and same for bonds as well. Right? Yeah. Bonds do have a place. Bonds are trading very cheaply at this moment in time. Yields are very attractive where interest rates have come up.
Yeah.
So we're getting a risk-free 5.5% or so. But to answer your question, stocks and shares, bonds, property, and then start to build in alternatives. And I know a big, your listener base is big into their crypto and their alternatives. 100%, it's got a place in investments, traditional investments. And, I think the rhetoric around crypto is changing substantially with the Bitcoin ETF approval and the Ethereum ETF approval. But that means that it's now so much easier for people like me to incorporate that into clients.
And I was going to ask that, you've kind of touched on that point. We obviously had, this week that we're recording it, but, won't be this week when it goes out, but we had the ETF approval for ETH. We had Bitcoin 2-3 months ago. I saw an article on Bloomberg yesterday that the BlackRock Bitcoin ETF is now the largest Bitcoin fund, effectively $20 billion or something has gone into that fund. It's it's the fastest growing ETF that's ever existed. All these sorts of things, right? Which, for all the haters of crypto, shows the demand that people have for this asset class, right? Rightly or wrongly, and I'm not here now to say that rightly or wrongly, but that is the fact. Do you get people asking you about a Bitcoin ETF and maybe now an Ethereum ETF? first of all, and secondly, can we access that market from here? Because I know the UK, for example, locked out Bitcoin ETFs for quite a while. I think Wisdom Tree last week announced that they are now allowing UK based clients to invest in it, but before that, nobody was able to. So yeah, I guess that's a big long question there. But A, are people asking you about it? Are people aware of it? And B, are you able to access it from the UAE?
Yeah, great question. So people are always asking. My client base is, your successful working professionals, middle-aged, moms, dads, businessmen, businesswomen. So people are always asking about it, but partly driven because it used to be quite unaccessible.
Yeah.
Right? You used to go and have to open a Coinbase account and then transfer from one wallet into a different wallet. And, there was a long string of technical stuff and terminology and jargon that people were unfamiliar with. So people naturally have asked about it for a long time, especially when we get those price booms that we see in Bitcoin and the crypto market. So I couldn't agree more. Like, the demand is there 100%. It's not something, because we're a regulated entity, right? Everything we do is regulated and has to be ticked off by the regulator, of which crypto, before the ETF approvals, came nowhere near. Yeah. So yes, people would ask about it. Could we help people with it? No, give them information, but this isn't advice. Go and do it on your own time. And, I wish you the best would essentially be the conversation. Whereas now, as I say, like the ETFs have made it so much more accessible to the banking world, the asset management world, for us to start to build into client portfolio. So can we access it? Yes. Right. Not all institutions make it available. But again, that's why we're independent, right?
Yeah.
So we don't only, or I don't only represent one bank. Whatever a client wants, I can go and find if they're big into their crypto space. Okay. Make sure their investment is custodied with a bank that will make those ETFs available.
Accessible. Yeah. No, that makes sense. And I guess on that kind of tech piece, are you seeing, I know in the UK, it's a big fintech hub. We've seen a lot of innovation in the kind of wealth management investment sort of space. Are you seeing much of that tech here? Are you seeing much innovation in the space here in the UAE?
Yes, absolutely. Huge amounts. And I'm more on the investor side of the equation. So, do I see companies innovating firsthand? No. Do investors want to take a slice of the pie and get involved in this sort of innovation? Absolutely. And I think, the client base here in the Middle East is naturally more willing to accept volatility and risk than, for example, a UK client base, because of the nature of, in order for you to move here, you need to take a massive risk of relocating, right? So naturally, the base here is more risk-taking, and also, again, more clued up and switched on to innovation and where the world is going. So, yes, like there's... What was your question?
No, it was just around the fintech. Are you seeing innovation in fintech markets in the products you're looking at?
So yeah, there's definitely an appetite for clients out here to get involved in that market. I'd say it's more on your private equity side of the finance world. So where I sit is more your traditional long-term investment planning world. Your stable, boring investments, if you like. We don't get massively involved in the private equity side. But as an industry, it's huge out here. There's no shortage of private equity firms for clients of the caliber that do want to get involved. So you want to get into that,
it is possible, isn't it?
100%, absolutely. And I've got contacts in the market that I can put people in touch with. I do put people in touch with, but it's not something that we do in-house.
Inside a regulated product. A bit like, I guess, crypto before ETFs. It was, if you want to do it, we're not going to tell you not to.
Yes.
But you need to go and source that elsewhere. Same here with the kind of private equity stuff. If you want to do it, we're not going to say don't, but you need to go and speak to these people who are experts in that space. So I guess we've talked a lot about the UAE and the podcast itself, or this episode of the podcast itself, is around wealth and the UAE and Middle East. But I guess, first of all, touching on the wider Middle East, where you're seeing maybe some trends, and then maybe a bit further afield than that. It doesn't have to just be the Middle East. There are other jurisdictions that I'm sure you guys operate in and stuff. So yeah, maybe start in the wider Middle East. You seeing any other up and coming areas? And then after that, maybe a bit wider field.
Yeah, absolutely. So obviously, Dubai and the UAE it's 10 years in front of the rest of the Middle East, but we can't ignore Saudi.
Yeah.
Saudi it's made no secret of the fact that they're looking to chase the tail and overtake Dubai. And they've got these huge projects going on. The amount of investment in the area is absurd. It's absolutely huge. And again, the likes of what they're doing in sports world, for example, boxing, golf, etc. They are very much coming to the table on that world stage, and they want to be a serious competitor. So, in terms of, I guess, economic activity here in the Middle East, and I said it already, a lot of people are moving to Dubai. Saudi is going to catch up, and it's only going to increase the focus and the economic activity and also the opportunities for investors here in the UAE. Not in the UAE, here in, the Middle East. So, the trend is that the UAE is very much becoming more and more of a competitor with the developed world, shall we say. Rewind 10, 20 years ago, everyone wanted to go to the UK or Europe or America. All of a sudden the UAE seems to be, taking a lot of that
I agree.
attention.
And we're seeing in Saudi piece as well, not just from the perspective of I guess clients or whatever, but talking to somebody the other week who's heading up the talent side of hiring talent basically for a huge project going on out there. And they're talking, the numbers are insane in terms of the amount of people they want to bring. And this is, obviously there'll be an element of, there'll be some locals involved, and all that sort of stuff. But a lot of this is an element of getting people there. And the big thing then is, okay, well, we can get them there, but then what will make them stay?
Yes.
And as you say, Dubai's, I guess, taken a head start on that, which is fantastic, but it also gives the opportunity for these other places to go, well, actually, the model does work. If you can make people stay, the model works. I guess maybe one challenge, say, Riyadh has versus Dubai is it doesn't have a beach. Which
they'll build one, I'm sure.
But that is a factor, right? Because people buy into beachfront property, like we talked about earlier, or they buy into the lifestyle of being able to go to the beach, or if on Saturday you decide to go and chill at the beach all day, you can.
Yes.
Where it's a bit more difficult. So I think that's the other thing, is that some people I'm seeing are working Saudi, but maybe commuting. So they're being here 3 days a week and then they're in Saudi 4 days a week, for example.
Yeah.
It's an hour and 45 minutes on a plane. It's not very far at all. So that I'm hearing. What about the wider market outside of the Middle East? Are there any other jurisdictions that clients tend to invest in or see in, or any up and coming markets?
Yes, great question. And I think if I don't look at it geographically, if I look at it more from a sector point of view, we touched upon fintech. Technology is where all the innovation is. Mm-hmm. And that feeds into all of the other sectors as well. So, for example, I had a client ask me, I think it was 2 weeks ago, about investing in like the space race, investing in space and all that whole hype, for lack of a better word. Now, you've got a couple of very big players and a lot of small players, but you're throwing darts at a dartboard when trying to pick who are going to be the long-term winners there.
Yeah.
Everything that they're doing is going to be created by technology and technical innovation, right? So as a trend and as a sector, where are we slightly overexposed for our clients' portfolios? Naturally, it is technology. And technology has been on, an incredible run, fueled by the artificial intelligence hype, again, for lack of a better word. But it's justified in our opinion, and in my opinion, because if we look at the likes of NVIDIA, everything that every other company is now trying to build in, every company is trying to come to the table with artificial intelligence and build it into their product or their website or whatever it might be in some regard, that's all coming from NVIDIA right at the front of the supply chain. So
yeah, I agree. And just jump in there. Similarly, Tesla, you mentioned Tesla and the drop off in stock price and things, but the reason their stock price has dropped off is because people are now coming to the table with alternatives.
Yes.
They were the ones that innovated in the first piece. So you're right. Is timing that is very difficult.
Yeah.
But I think AI is, and we've done an episode on one of the previous episodes on the podcast, talking about AI and the how that can work, what it does in process. I think the opportunity is exponential.
Yeah.
But again, there'll be a bit like the internet, right? You're a bit younger than me, I think, so you may not remember things like Ask Jeeves, right? And there was this search engine that you'd Ask Jeeves.
Or Yahoo.com.
Yeah,
right?
Yahoo.
Absolutely huge, and now it's
don't exist. AOL was another one that's huge, doesn't exist anymore. So there will be lots of, and that's unfair on those businesses to say that they were scams, because they obviously weren't, but there'll be lots of companies that say they can do it and they can't.
Yes.
Or there'll be lots of companies that come out early but then don't innovate.
Yes.
And therefore fall away. So finding those areas of niche are very difficult, but if you can, they can be very lucrative.
Exactly, 100%. And, you know, if you want to go and take the risk of trying to pick the next Google or Apple, then go ahead and do it. Like, I'm not here to discourage or, you know, persuade anyone against doing that. Go and do it, but be sensible with it. You know, 5% of your portfolio, no more, is even quite a big chunk, for example. And same in, to bring in, I guess, maybe more relevant to this audience, like your altcoins, right?
Yeah.
So, you know, go and play around, and you'll have projects that you firmly believe in, and people have companies like this client I mentioned who maybe had a couple of companies in mind within the space sector that he firmly believed in and wanted to invest his money in. But like I say, all you're doing there, and back to the dot-com bubble, you know, you're throwing darts at a dartboard, you're crossing your fingers, and you hit the winning lottery ticket. Whereas if you zoom out, you know, diversify, so go and buy the whole sector. An ETF or a mutual fund is very attractive for that. But actually, to correct myself, maybe not so much from an AI point of view, because there are so many duds in there.
Yeah.
So how do you manage that risk? Go to look at the supply chain, go to the front of it. Okay, that's where all of the money is flowing. Naturally, you know, it makes sense. If you want the exposure in your latest and greatest, you know, healthcare AI company that's innovating, you know, there's probably 300 of them. You don't know which ones to pick. Well, they're getting all their chips for NVIDIA. So take the safe bet and maybe go and allocate, you know, a couple of percent here and there.
And that, I think that's the key point there that you've made, is that, you know, and this is what I say, you know, crypto is, I believe, amazing. But I also don't believe you should put 100% of your net worth in it. Yeah, I don't have that. You know, it's not a sensible approach.
No.
You know, but in the same token, putting 100% of your net worth in Dubai property probably isn't a sensible approach. Putting 100% of your net worth in US equities probably isn't sensible. So it's all those things around that, you know, kind of being sensible and having a diversified, we're coming back to that piece again, approach to what you're doing, which is, yes, do this, and yes, do this, but do it in context of everything else that you're doing.
I couldn't agree more. And again, you know, that comes back to the education piece I was talking about as well, but also time. So I mentioned people come here with very short time horizons, like 1 or 2 years. So they fail to plan and prepare. And then 2 years turns into 10. And then they still, you know, on the fence. Will I go home? Will something happen? Will I lose my job? So time naturally eats away. And you get to a point where so many people are in a financial position where it's now too late. They don't have time. So now they have to take these astronomical risks with their wealth
to catch up, as it were.
To try and catch up.
And I guess that's a good way to then move on to the rounding this off into, okay, so I've spent time out of the UK and now I want to go back. And that might be a want, and hopefully for most people it's a choice rather than a necessity. But in some cases it is a necessity where they have to. And if they haven't considered that, you know, there are tax implications, there are, you know, financial implications. When people are looking at exiting somewhere like this, we've talked about coming here and all the things we can do, but when we then decide we're going to go, what do people need to think about at that point?
Yeah, great question. And, you know, obviously everything we do with clients is long-term. Investments constantly need to be rebalanced and stuff, but I mentioned where we truly add value is the financial planning piece. The biggest parts of that are these big transitionary periods in people's lives. So first one is leaving the UK or leaving one country or a taxable environment, whatever it might be, and moving here. So a huge amount of work and planning that we do with clients on the front end is structuring those assets, moving them from A to B, moving them out of a taxable environment, offshore, making sure the pensions looked after, ISAs, everything that we've covered already. And then, of course, we take care of them here. But to come to your question, yes, now they've been in this rosy green environment where there's no tax. They're going back to the UK, serious complications. All of a sudden, you're stepping back in an environment where you have to file, you know, reports and let the tax man, HMRC, know everything you're doing, why do it, and they want a slice of the pie every time. So, you know, there's a lot of planning that we do, and the earlier you start planning for these things, the better.
Yeah.
Because there are, again, a lot of tax efficient ways that you can structure your assets, you know, years in advance, 10 years, 15, 20 years in advance, ahead of, well, I know I'm going to retire in the UK at some point. So structure your wealth accordingly, right? And you will reap the benefits of the time and effort that you spend planning for that eventuality.
Agreed.
But even, a month before going back to the UK, for example, huge amounts of planning can be done to save you hundreds of thousands, millions, depending on your net worth, but huge astronomical amounts of tax that you would have paid otherwise had you failed to plan or engage a professional. To give everyone a very simple example, like something as simple as rebasing your assets, which is essentially sell all your assets before you step into a taxable environment, rebuy them. All you're doing is now locking in today's price from a capital gain point of view moving forwards, then the capital gains that you've made during the whole time you're offshore. Then you go back to the UK, paying tax, and then you sell, you're paying all of those gains. So such a simple example, so many people fail to do, and then they end up paying the price for it down the line.
Exactly that. And fail to plan is the key thing there, is that, have a conversation with somebody like yourself before they go back to the UK to say, right, this is my position, this is what I'm doing. I know we've not worked together, but are there any kind of key things that I can do at that point? And like you say, one of those things might be rebasing those assets before you leave and locking in those gains in a more tax efficient jurisdiction. The other thing I think is rounding the leaving, during, exiting, is people don't realize sometimes that there are time limits on some of these things that maybe then pull these things back into tax, So, a basic kind of CGT potentially is a 5-year pretty much period where, you leave the UK, you sell everything in the UAE, 0 CGT. If you then go back to UK within 5 years, in a lot of circumstances, not all, then there could be a tax that could be brought back into UK tax. So people then go, well, I'll move, I'll spend a couple of years and then I'll go back. I've made all that money tax free, so it's fine. And then they get back to UK and HMRC says, no, I want some of that.
100%.
So it is that holistic plan, right? Leaving, during, exit, and making sure we're entering, during an exit in terms of another jurisdiction, and really making sure that whole plan
absolutely. And that's where, again, that's why what you do and what I do complement each other so well, because I deal with clients all over the world. I'm not a tax expert. I know the fundamental tax laws, shall we say, of a lot of countries, but I don't know the intricacies. And that's where, like I say, we complement each other so well. But you do need to bring in these experts from various different sectors of finance. Again, what did you say? What the question you asked earlier was, does it give you a problem? Is I've got an accountant. It's like asking your goalkeeper to play striker, right? You've got an accountant. It's completely irrelevant. It's got nothing to do with the area of finance that I work within, and I've got nothing to do with the area of finance you work within. So it's so important to consult with these professionals to ensure that you are doing everything within your power, and so again, just not overpay.
So, and I guess on that point, it's around not being naive, maybe is the word, and understanding the bigger picture and what's going on, and and I think your football analogy is quite good, right? In that you can, and if you're into football, you'll know the Real Madrid Galactico days, right? Where they just basically bought the best players. They didn't care where they played as such. They just bought the best players, right? And sometimes that works. But in other circumstances, you can build the best team. You can buy the best, let me rephrase that. You can buy the best players, but not have the best team. And I think that is critical sometimes as well. You can go and pay, for example, a large wealth management firm or a large top 4 accounting firm or something like that and think, well, I'm buying the best, therefore I'm getting the best. Are you getting the best for your circumstances? Maybe not. Maybe you are, but maybe you're not. And I think the football analogy is good there. If I buy the best player in the world, does that make me a better team? Maybe not, But what I do know is if I buy 11 absolutely amazing players, they may not be the best in their position in the world, but they are, as a team, they are incredible. And I've got all those people around me, my chances of success are much higher. And I think that's the same with what we do and the complementary services that we offer and how we help build. We've got hopefully I'm going to grab Connor on this podcast, but Connor is another example of someone that within that team, we can help the client in one aspect, he can, and so can you. So
no, I couldn't agree more. And that's really the true value that we bring, which is the resource that we will give to one client, for example, compared to if we use the Big Four as an accountancy firm versus you guys, one client to the big four is irrelevant. Are they going to go above and beyond? Are they going to really take the time to get to know you as an individual, the intricate details of your financial affairs, and make sure they're giving you a really specific, detailed, and tailored approach?
Yeah.
Probability says no. And the same here. Like, if we client's got $5 million, that's nothing to the tier one banks of the world. Like, $5 million is irrelevant to them.
Yeah.
$5 million to myself and my company, much more meaningful amount. But also we've got the resource and we understand and value the relationship with those clients because we want to retain them for a long period of time.
Yeah.
Whereas you can't necessarily say the same for those big companies.
No, I totally agree. So, look, fascinating conversation and always is when we talk. So thank you for that. I guess a couple of questions, and I want to make sure people know where to find you. So we'll definitely put those links in because some of the content you put out right now is amazing, and genuinely check out Kevin's profiles and stuff because you put out some really, really good content. And in this space, not many people are doing the level of content you're doing. So I want to say well done to that. In terms of an ideal client, target client, who's the type of person that if listening to this should come and talk to you? Yeah,
great question. So fundamentally, I'm a financial consultant, so I'm a problem solver. Anyone with a problem or a question or an uncertainty in the back of their head, really, I can add value directly. Or if I can't, I know people like yourself or people like Connor that we mentioned, and lots of people within the industry that can answer those questions and provide advice. So fundamentally, anyone with uncertainties, questions, concerns, reach out. Don't be shy. I'm always more than happy to add value, provide value, and give people my time wherever I possibly can. I think where it becomes more critical is, as I've mentioned, in those big transitory periods of life, whether it's, relocating, becoming an expat, repatriating, having a family, for example, purchasing property, selling property, these big financial commitments, shall I say, that's when you can truly make or break the effectiveness of your long-term financial strategy or your long-term financial goals, whether it's achieving great high net worth or just preserving capital, for example. But these big changes in people's finances, that's really when, like I say,
points.
Exactly, 100%.
Amazing. And where can people find you? Like I say, we'll link it, but where can people find you? Where's the best place to find you?
Good question. So kevincrowther.com is my website. Instagram, Kevin_Crowther. LinkedIn, of course, as well, Kevin Crowther. But yeah, like I say, don't be shy. Reach out. Any questions at all, always more than happy to help.
Kevin, thanks so much. Been a great session, and look forward to seeing you soon.
Perfect. Thank you very much. Appreciate it as well.
Thank you.